We'll go back to that Stacy Wilson story later because I know Nicole's got a busy day. Nicole, stage is all yours.
Hi, guys. So sorry about the technical difficulties. Um, and I apologize. I don't know which screen to look at. I've got three monitors in front of me. So if I look all over the place, I apologize.
It's okay.
Um, Wanted to talk a little bit about claims from a title perspective. I want to make sure that I'm clear that I'm not trying to be the claim process from the insurance point of view, from the homeowners insurance point of view, just mainly how it affects the closing is on my side. So I wanted to talk a little bit about like current claims or closed claims. So with current claims, you guys are going to see, well, you'll know if there was ever a claim on the property by when your seller completes the seller's disclosure statement, because there is a clause on your seller's disclosure statement to ask about if there's any existing, pending, or current claims.
But
So
Nicole,
that's
excuse
going to
me. Hey, Nicole, are you talking about insurance claims here then?
correct.
Right. Okay.
We're
Thank
talking
you.
about like insurance claims, and like this is what you're going to see because of these past disasters that just happened with Helene and Milton. So like flood claims.
Okay.
So you'll see it on the seller's disclosure statement, and there's going to be different ways that you're going to have to look at it because you might be representing the seller, you might be representing the buyer with the loan, you might be representing a buyer that's paying cash. So if the seller has an existing claim on the property, and let's say that they're in contract with a buyer that's getting a loan, the buyer may go try to get insurance because they have to for their loan, and they might not be able to because there's an existing claim on it. That's going to hold up your closing because they cannot close without the insurance. So that might be something that you're going to have to kind of think about. And when you're having these disasters, talk to your seller about, find out where your process is in the claim. Is it just about done? Is it just starting? Because that would really prolong the closing. Also, if you have a cash buyer and there's an existing claim, title insurance, we can still close with a cash buyer. We don't have to have insurance. But let's say your buyer wants to close and then they find out there is a claim on it and they can't get insurance. And what if there's another storm out there because they can't get insurance because there's an existing claim on it? There's another storm out there. They're stuck. So just kind of be aware of that too if it's a cash buyer. Then I also kind of wanted to talk about like any closed claims. I had a very unique situation probably about a couple of months ago, whereas there was a claim that was completed and the seller had a check made payable to them and the insurance company. So when the claim is completed, the insurance company is either going to want the money to go back into the house to redo the house to fix what was made the claim about, or they're going to want that mortgage paid off. Well, in my particular situation, we had a closing where the seller didn't want to fix the property. They wanted to sell it. But here we are with a check made payable to the seller and their mortgage company. And so, of course, then they get an offer on the property from an investor that wants to buy it as is and fix it up on their own. So now I have a check made payable to the seller and the insurance company. So if you have to the lender. In a situation like that, you really want to talk to the title company up front about it, because the title company is going to have to be the one to be able to accept that. We have to get approval through our underwriters. It's not something where we can just make that call. We're talking about paying off a mortgage with possibly a check from the closing and another check that the seller is going to give to you. So in that particular situation, we have to, as the title company, you're going to want to speak to them, be upfront with them. We had to, in our situation, get to the underwriter that was insuring the title insurance policy, get approval on that. Then I had to contact the mortgage company and be proactive in this approach. I had to send it to the research department with a copy of the front and back check. So that way they would approve it. Because otherwise, if we close and I send this check to them, they may not accept it. And then guess what? I don't have a paid off mortgage, which is a problem. So there's different scenarios that come into play with this. And it kind of just depends on where the claim is, what status is the claim, are you representing the buyer, seller, or cash buyer? And all of these things come into play when you have a claim. Does anybody else have any other examples that you guys are dealing with right now?
Well, Nicole, thank you for that. First of all, may I ask, let me just throw Sean in here real quick, because Sean, how many of these homes that aren't fixed, who can anybody get a loan on them anyways?
Uh, it depends on how extensive the damage is. You you got the 203K loan, you got the home style renovation, which is Fannie Mae. So yes, it's possible.
But
Okay, but
highly unlikely.
it's going to be tough. Yeah, it depends on how much work has to be done.
So Nicole, when that check is written to the seller and to their lender,
Mm-hmm.
you're saying that they can bring that or give you the check, and then you've got to make sure that the underwriter is saying, yes, we're going to accept this as payment to pay off the loan, and then if there's proceeds left over, going back to the seller.
Correct. And in our particular situation, not only did I have to verify it with our underwriter, but the mortgage company that's going to be accepting that check. Because it had to go into their special research department, whereas they already know that there's a claim on it. Because don't forget, they have a mortgagee interest into the property. So they already know that there's a claim on it because they get notified as well. But I still had to make sure that they were going to accept that check. And in this particular case, it was a pretty decent size sale. It was, I want to say, like 600,000. The check was close to 300,000, and the seller was walking away with a substantial amount of equity in it. So I wanted to make sure that, number one, we were proactive with the mortgage company, sending them this information. They already knew that we were having a closing because we had ordered a payoff from them ahead of time. So we ordered the payoff, we got approval from the underwriter, and we had to send the documentation into the research department. So that way we can get verification that they would accept the check. You want to do this all proactively because the last thing that you want is to close and be done and then get a phone call from the mortgage company that they won't accept that check. Nobody ever wants that call. So, and also, you have to be very careful with where that check is and make sure that it's very safe, because at this point with the check that was provided to me, the seller had already endorsed it. So now I have a check and a lot of money already endorsed by the seller, made payable to the mortgage company. And we had to overnight that, of course, because we want tracking capability of it. But you want to just be proactive in this because you don't want to have this, come up to bite you. And in some situations, I really thought the underwriter was going to say, let's hold the seller's money in escrow, which I think is a safer bet. The seller might not have liked that, but to ensure that the mortgage company isn't going to come back. But the underwriter allowed it. So I'm thinking that the underwriter probably have seen this situation before. It's not like this is the first time a claim has ever happened, but it's just processing it the right way.
Well, I'm sure you're going to see a lot more of those in the near future. So what's the alternative for the seller here? I mean, couldn't they just take that check and deposit it once the lender signed off on it?
Well, the check is made whenever you have a claim and there's a mortgage on it, the property, the check is made payable to the owner and the mortgage company.
Right. I know that, but then we were told in a different meeting where, basically the lenders are pretty quick in signing off on that.
I don't know about that.
No.
I think it kind of depends on what you're going to be doing with the property. In this case, she was selling it. So she was selling it, so she wanted the money to go to pay off the mortgage. If she wasn't selling it and she wanted that money to go towards improvements on the property, it possibly would have been handled a different way because the money was going back into the house. So maybe the mortgage company would have then signed off on it. So I'm not sure about how that would have happened because that at that point it would not have been in a closing transaction. I would not have been involved.
Right.
But I have had a personal experience where I've had a claim myself and they wrote a check to me and the mortgage company and I had the mortgage company endorse it and that money went back into the property. So it just, it depends on what the state of the property is. Are they selling it or are they keeping it?
Yeah. Mm-hmm.
Hey, John, I had a
So this
question.
is
Go ahead, Jay.
Yeah, so this is pertaining to the title insurance. If the sellers have a active claim with their insurance company, with FEMA, and that has not been settled, and buyer and seller want to close, can the buyer get a new title insurance policy?
well, the title insurance policy and the homeowner's insurance claim are two different things. They're two different animals.
Right,
So
I understand. I was
the
more interested in just the title insurance. As John mentioned, we had somebody talking about, homeowners insurance and stuff, but I was just curious if a new title policy, if the insurance and FEMA claim has not been settled, does that affect a new title insurance policy?
No, we could still close. It depends on if they're buying cash or not. If they're paying cash, we don't have to have homeowners insurance to close. So if the seller has an existing policy or an existing claim and they want to sell the property, the buyer is, let's say the buyer's paying cash because we know if there's an existing claim, they're going to have a problem getting homeowners insurance to finish their loan. So if they're paying cash, then we don't need to get confirmation that they have homeowners insurance to close. So we can still close. Now, if the claim, it depends on if something like, if the claim is being done and let's say a new roof is being done and they file a notice of commencement for a new roof, well, then that's a lien on the property. So that will have an impact on the closing because we need to make sure that the roof is done, permits closed, and the roof is, the lien is released. So if there is something recorded in public records, then that could impact whether it can close or not because it would have a lien on the property. Does that make sense?
Mm-hmm.
It does, yes. Yeah. Can I ask another question?
Go ahead, Jay, while you're
Of course,
at the
please.
stage. Go ahead.
Thanks. So we're seeing offers that could, eventually become contracts in a lot of cases with these distressed properties, and those offers / contracts are assignable. So for whatever reason, the seller is delirious and agrees to that, right? And then a week before the closing, 3 days before the closing, whatever the case may be, that buyer comes in with a new contract and says, or I guess not a new contract, but I don't know, John, what would they show up with to say, I just assigned this deal over to Jim over here?
It's simply an assignment form that Nicole or any title company can provide, just assigning it from buyer one to buyer two. The contract does not change. Okay. The terms of the
Right.
contract are still the same.
Okay.
But they're
So,
assigning it to buyer B for 10 grand because that's what they're doing. They're making a quick 10 grand on assigning the contract.
Uh, so just, I know, I'm sorry, this is away from title insurance or, title closings and stuff, but John, is the seller pretty much just kind of, if they agree to it up front, they're pretty much kind of forced to accept that.
Well,
they don't have to ask for any proof of funds or qualifying or anything like that.
no, remember this though, because Stacy had this exact question for us yesterday because the buyer was going to put it in their trust and the trust wasn't established yet. There's nothing wrong with an assignable contract as long as the buyer is not released from the contract. There's three choices in the assignability section. May not assign, may assign and be released, may sign and not be released. So if you're a listing agent, if you get an assignable offer, it's not the end of the world. It's not a big deal. Just never accept one where the buyer may be released. Okay. So Jay, just because it's assignable doesn't mean buyer one is not liable to close on that transaction. They are. Okay.
Okay. All right. All right, John, thank you.
And
I
as far
appreciate
as
that. I'm sorry to get away from the title talk. Go ahead. I'm sorry.
All good. Go
no,
ahead,
no,
Nicole.
no, you're good. And I was going to say, and from a title perspective, once we get that assignment, we do have to have the title search updated because the title search not only runs a description on the property and what we have to clear up on the property, but it also runs the buyers and sellers' names. So we would have to update that with the underwriter. I'm sorry, the abstractor, which is in most cases the same, the underwriter.
Thanks, Nicole. Go ahead, Chris.
Nicole, if there is a lien, I don't know, say some other type of construction needs to be done, it's minor or it's something that we see very commonly like a roof. Is it at the buyer's discretion if they want to close and leave the lien because they know that it's going to be paid or it's already been paid and they're just waiting for the process and they don't want to hold up closing because they got to move or whatever? Can they do that, or and this may be a Sean question, is the lender going to have a problem with liens, or on the title, is it just the buyer that has discretion, or will the lender, if they're getting a loan, step in and say no, it has to be a clean title? Thank you.
I would say that the lender would have an issue with it, with a contracting lien on the property. As far as if it was a cash, we would have lots of hold harmlesses signed because we wouldn't want this to come back because you've got two issues with a new roof. You have not only the lien that has to be done, you got payment for that, which they're not going to release until it's been paid, but you also have a permitting issue too because that permit's also got to get closed, which that permits, just so we're clear, title insurance does not protect against permits. Permits are in building records, but they work synonymous when it's a new roof because you have to have a lien. The notice of commencement is what I'm referring to as the lien that has to be recorded in public records. They can't get a permit without having that recorded. And now once it's been recorded, the permit's open, but they still got to close that lien. They still have to do a final inspection, or I'm sorry, the permit. They still have to close the permit. So once the contractor has done the work, gotten paid, they're going to call in for that final inspection, and then the permit would be closed. But if it was a cash buyer and they really wanted to close with that pending roof not being done, we would have that listed as an exception, and we would probably have them sign a couple of hold harmlesses. Not only is the fact that there's a lien on the property, but there's also an open permit.
Nicole, because I know I've had a situation where I had closed on a property and it was a AC, and the AC had been done like a year, I think a year in advance. It was just busy. It was during COVID, and the contractor just never went back or never called St. Pete to get the final permit. And just they do a drive by or whatever. He just didn't close it out. So it had been paid. He showed us paid receipt, all that stuff, and just hadn't gone to the city. So we were just waiting on the city, but the client needed to get in the house, and so they agreed to it. And they eventually got it closed out, obviously, and the lien was taken off. But I was just curious to see what your perspective was on that, because it does come up. And now with all this, storm damage and those type of things, I think it's going to be more common that we see these types of things. It's going to be harder for us to try and squeeze in closings. And it's always nice when you can be flexible and make the buyers and sellers happy. So thank you.
So in that situation that you're referring to, if the AC notice of commencement was filed like a while back, then the title company probably got a contractor's final affidavit from the contractor to release the lien, which they could have collected and had paid and recorded at closing. So they've been paid in full. Now the lien has been taken care of, and now we're just dealing with an open permit thing. If the lien has been paid in full, your lender is not going to have an issue with that. The buyer's lender is not going to have an issue with that because now the lien is taken care of. Now the title company can issue a loan policy and, of course, an owner's policy free and clear of any liens. The permit is a separate animal because that is what's recorded in building records. So if the lien has been taken care of, but the permit's still open, title policies are good. Hold harmless would cover the permit.
Cool.
Yeah.
Good question, Chris. Thank
So
you.
this is fun.
Anything else specifically in open claims or permits for Nicole?
I'll fire one off.
Go ahead, Jay.
Right. Sorry. Right. So, Nicole, certainly understand that there's issues with mortgage companies, issues with, like you're talking about, permits and surveys and, that kind of stuff. But I was going to ask, what do you commonly see as far as like chain of title and stuff issues come up that could prevent a closing? Like, children that are laying claim to, whatever stuff like that. I'm just curious.
Well, every property is different, and I've been doing this for a very long time. There's sometimes always a surprise issue that you have to deal with. So it kind of just depends on what the property is like. If you're dealing with children and you're concerned about the claims of the children, well, did the property go through probate? Because that's where any claims of any heirs would come up with is during the probate. And that's why properties have to go through probate. If somebody dies and you have to figure out who the authorized person to sell it, you have to go through probate, because only a judge can transfer title when somebody passes. A dead person cannot sign a deed. So they have to go through probate to determine who the rightful heirs are. And there's that whole probate process where they have to look, did they die with a will? Did they die without a will? They have to give notice. They have to record the death in publication. So that way, if anybody that could have a possible interest, whether it's creditor claims or not, they would have a little bit of time to respond back to the probate courts. Now, I don't really want to get too much into that because probate's a whole separate animal. I'd rather have like Messina Law Group kind of discuss a probate class maybe to kind of go through that process with, because I don't want to leave any pieces out. But if somebody dies and you're concerned about any heirs, then you first want to find out, did this property go under probate? And that would help answer like any of those questions. And if you ever have a property like that, reach out to me. I can do a lot of preliminary research before you get the listing to find out who has to sign the listing agreement, if the property's at a point where we can find that information out. Also, touching back to the permits, if you guys have any properties, whether you're representing the buyer or the seller, if you want me to do permit searches ahead of time, we can do that to find out if your subject listing is going to have an issue come up. We can always search that. That's public. It's pretty much public records. I can pretty much find it for any of the local municipalities, Hillsborough, Pasco, Pinellas. All the other counties, I would have to kind of look into kind of see if I can navigate through their permit system, but most likely I will be able to. So if you have a concern, even if you're representing the buyer and you're just looking out for your buyer, let me know. I can help you.
Thank you, Nicole. Hey, Nicole, clear up for us for some who may not know, just because someone has a will, right? That does not mean that it still has to go through probate, correct?
Correct.
Okay, go ahead.
So if somebody has a will, then it still has to go through probate because they still have to give notice to those people that were represented in the will. The will is better for probate because at the end of the day, the judge wants to descend the property to however the deceased wanted it to be descended to. So that's the whole purpose of the will. And you're going to have less, well, I shouldn't say you'll have less contesting, because when people die, you just see all kinds of things out of the woodwork. You really don't know. But that's the whole purpose of having that will, is to give direction of what the decedent wanted. And in most cases, the judge is going to follow that. So I'll give you a different scenario. I've had a closing where the property went through probate and there was 3 kids, 2 natural born and 1 adopted. The probate went through and the judge devised the property according to the decedent's will that said that her natural born children should get the property. They left the adopted child out of it. In this case, the kids all grew up together. The natural born kids said, no way, we want our adopted sister to get a third of the proceeds as well. So even though the adopted child didn't have to sign off on the deed because the judge didn't convey the property to her because of the language natural born, whether that was in purpose or it was just a template, that's how the property descended. So in that case, upon direction of the natural born children, we were able to have the natural born children sign off on the deed to correct the chain of title. And we were able to have them sign an authorization that a third of the proceeds go to the adopted child. They were siblings. They all grew up together. So, and it might have just been a formality, like I said, in a template will that nobody really caught on to.
Interesting.
So,
sounds like a This Is Us episode.
What's that, Jay?
I'm telling you.
Sounds like a This Is Us episode.
Yeah. And obviously that's why that's the main. We can have a huge discussion the difference between wills and trusts, and that's the trusts basically, are going to spell out exactly who gets what, and they don't doesn't have to go through probate.
Correct. So, and with a trust, you have the trustee, assuming they put the property into the trust. That's a common mistake as well. People set up a trust, but then they don't put their property into a trust. All right. So if the property isn't transferred from their names individually into the trust and recorded in public records, then it's in their names individually, regardless of if they have a trust or not. So when you have that deed in the name of the trust, original trustee passes, in that trust agreement, it will show who the successor trustee is. At that point, the successor trustee is able to sell the property. They have to get what is called an EIN number for the trust so that the proceeds go and are taxed to the trust. And they have to set up a bank account in the trust because that's where the sales proceeds are going to go to. A lot of people don't know that part when they're successor trustee. So,
right. Karen, you wanted to say something?
Oh, I was going to ask Nicole, in what situation do you avoid probate? And obviously then you talked about if it's in a trust, that avoids probate, correct? And then isn't
that avoids, yep.
And then someone had mentioned, isn't there something like a form of ownership where it automatically confers upon death?
POD, right?
Yeah.
Can you explain that to us? Because I find that interesting. And that avoids probate.
A couple of different ways. Okay. So we know that if it's in the trust, then it would go to their successor trustee. If you could also add a tenancy, let's say if you're husband and wife, you can take title as husband and wife, so long as that you guys don't get divorced. If something, God forbid, happens to the husband or wife, then all you would have to do is record the death certificate, and then the survivor would be able to convey the property. And that's because they took title as husband and wife, tenants by the entireties. Or if you have two single people, joint tenants with full rights of survivorship. Means that if two single people own the property with that tenancy labeled on the deed, whoever passes, the other person would automatically get the property, and we would just have to record the death certificate. Let's say you have two single people and you don't put a tenancy on there whatsoever. It's Jane Doe and John Doe, two single people. If there's no tenancy on there whatsoever, it's going to go through probate. The courts can't assume what you wanted to do with the property. So if there's no tenancy on there, it goes through probate if somebody passes. Joint tenants in common, same thing. If somebody passes, if it's joint tenants in common, the person that passes, their portion would go through probate. And what I think you're referring to is a life estate deed. If you have, and this is something that a life estate deed would be prepared by an attorney, or we can't, as a title company, prepare a life estate deed. Our deeds, from title perspective, have to be done on a warranty deed per the purchase contract. It will say what kind of deed we have to do. So if your clients are going through estate planning and they want to do a life estate deed, it would convey the property to the person that you want to have the life estate. And then there will be a clause in there that says, upon death, the remainder would go to, and then it would list who it would go to. So if there's one child, it would spell their name out, but it would have to say upon death. There's a little clause that the attorneys put in there as well that says that they have a life estate interest, that they can retain, that they are able to live in the property, and upon selling, the proceeds all go to them. That, with that language, that helps them keep the homestead exemption on the property as well.
Is that also what's referred to as a ladybird deed?
Yes, yes. Life
Okay.
estate deed, ladybird deed, those are one and the same. Yep.
Okay. And
So
just a quick question for the newer agents out there, maybe, if they want to check who is actually the owner of this property, is this all public record? Can I find out if it's joint tenants or first right of survivorship or a transfer upon death?
correct, you can. It's as long as the deed is recorded in public records, we can search it.
Okay.
What I was going to say too, the ladybird deed is a really good thing if you have somebody that's a little bit older and that you think is not doing too well. You might want to recommend that they see an attorney to get a life estate deed, ladybird deed, executed and recorded. Because if somebody is in their in a stage that you don't think that they might be making it, there's a point of time where they're not able to sign a deed because they don't have the capacity to do so.
Got it.
So that might be something that it's a tough conversation to have, but otherwise their heirs are going to be stuck paying upwards of $5,000 for probate and delaying the sale of the property.
Yeah, and Nicole, that's probably a lot quicker process than or setting up a trust, obviously.
Or setting up a trust, correct.
Right.
So it just kind of depends on what their situation is. A trust, again, that's probably a better question for like Messina Law Group, but maybe they have lots of assets, or something like that they might want to spell it out a little bit more in a trust.
Yeah. Mm-hmm.
If it's just the property, then they might want to consider the ladybird deed. But an attorney would be able to give advisement to their clients of what would be better for their situation.
Right. And for those who've never written up an offer on a listing that is going through probate, you need to be really patient depending. Some are much quicker than others, but we had one we wrote up in March, and we were a backup on this one, but we hung in there. This is the one in Highland Lakes, and had the buyer one dropped out because she didn't want to wait any longer. Well, 6-7 months later, we closed. So just be prepared. They could take a very, very long time to close. So, yeah.
They do go quicker if it's the decedent's homestead. Okay. If it's their homestead that it's not subject to creditor claims, so you don't have to wait out that 90-day period. There's also situations where the probate attorneys can go into and get an order authorizing the sale to take place from the judge. So let's say you have a property, it was the decedent's homestead residence, you need it to close right away. The probate attorney can submit what is called a request for an order authorizing the sale, where they have to present the contract and they would give that to the judge. The judge would sign off on that order, but the proceeds don't go to the heirs. The proceeds would be made payable to the estate. And it would be usually held by the probate attorney's trust account. So that way, when the probate is finished, the probate attorney can disperse the funds as they need to go. But that way, it's an alternative so you don't have to hold up the sale. Let's say your market is great and you think it's not going to be so great soon, so you want to get it under the market and sold right away.
Got it. Very good. Excellent. Any questions on that? Probate, trusts, wills?
I don't have any question on that. I'm back to the insurance.
Please, John, go ahead.
For Nicole. Nicole, if I had a buyer and they're buying a stressed property that's gone through hurricane damage and there's going to be a claim on it, what are the kind of the top things I should be doing to protect my buyers?
I would tell your buyer to start getting insurance quotes and find out if they're going to be able to get insurance. If there's a current claim on it, they might not be able to. And it kind of depends. Maybe you're in hurricane season and they want insurance on it. I would probably recommend that they reach out to insurance agents and start binding that right away. And if there's a claim on it, an existing claim, and they can't get it, well, again, if they're cash, we can still close, but it's a disclosure thing. We're going to make the buyer sign a disclosure that you understand title, that homeowner's insurance isn't required. And we're going to hold ourselves harmless. But it's one of those things that if you're representing the buyer, you want to maintain your relationship with them, and you want to make sure that they're going to be able to, that they're aware. Hey, there's a claim on this property. You're buying it as is, but you can't get insurance. Are you good with that? They might be totally fine. It might be completely gutted. Might not even have anything to insure. Maybe they're planning on knocking it down. But it's one of those things that just, if you're representing the buyer, you just want to, maintain your relationship. You're representing them. So you want to make sure that you kind of go over those things with them. So that way they can't come back at you and say, I didn't know.
Hey, John, you may want to add the insurance addendum to the offer, because even if they're paying cash, it's not a requirement. It's no financing obligations or it's not a requirement. And insurance is a requirement of financing. Since it's not with cash, you may want to add it to the offer.
But
Okay.
there was a poor pile of land last week. There is a way that you always can get insurance. It will cost you more, but you can get insurance in any kind of property.
Sure.
Whether it is going through hurricane or not, they're going to be able to close with a lender too. You just have to pay more because there's a limited market on what you can do. So insurance, I don't think that is the issue. Now, I do have a question on timing because can we still close these files in 30 days, or are we like going to 45 days now because you have to do like signings of checks with lenders and so forth? Is that taking longer?
It probably depends on what status of the claim is it. If it's the very beginning of the claim, the customers don't have their check yet. If it's the seller.
Like, my biggest concern with all this, because if you have a property that the seller has to have that check signed by the lender, who is signing for the lenders? Most people are going to be keeping the money, right? So they're going to be keeping the money from the insurance, and they're just selling the houses as investor specials. So what is going to happen if they close before they get a check? Can you still close before they get the check from the insurance company?
If they're in contract and their claim is started, but they haven't gotten a check yet, we're still going to be requesting that payoff from the mortgage company, and we're going to be requesting that payoff in full without having that check to supply to them. So that mortgage is going to get paid off first and foremost at closing. If they get a check afterwards made payable to them and the mortgage company, well, they're going to have to get it endorsed from the mortgage company before it's a valid check in their name that they can actually deposit.
But that's where I'm like a little bit confused, Nicole, because let's say that the buyer is buying. So the buyer is coming up with the money to pay the mortgage. So the mortgage company really doesn't have a say-so on what the buyer is doing. But they're going to get paid no matter what. You're getting that payoff. But then you close this property because you're getting the payoff. What happens if they come back with a check? Now the mortgage company can say, well, this check is due to me, and not sign it off to have the buyer deposit in their account. So that's why I'm confused a little bit, because I was looking at some properties yesterday that have closed in 6 days after, Helene, pretty much like what's happening right now. They close in 6 days. I'm sure it was a cash deal, but what will happen with the money when the insurance company gives the money to these people? If they already closed on the property.
When we're doing the closing, we're going to request a payoff from the seller's mortgage company, right?
Mm-hmm.
And we're going to apply that whole payoff on the settlement statement, because at this point, there is no check that's been issued.
Right. And the buyer's coming out with the money, right?
Yes.
Right.
Correct. The buyer's paying cash. So let's say you have a mortgage or a property, $300,000. The mortgage company has a payoff of $200,000. we're going to request that payoff and we're going to pay them $200,000 on the settlement statement. There is no check that has been issued yet.
No, but okay,
If the
so you
check has,
close this property, right? Okay, right there.
right,
Okay, the seller has an open claim with the insurance company. So they're getting a check with the insurance company that is going to be endorsable with the mortgage company that they just closed.
correct. So if the mortgage is paid in full, by the time that check is issued, then the insurance company may be able to issue the check just payable to that seller because now there's no mortgagee interest. So after the closing, okay, so we're going to go back up real quick. We're doing the closing. The check hasn't been issued. We're paying the mortgage off in full. At that point, the settlement statement should be given to the insurance company to let them know that they've sold the property and the mortgage is paid off in full. So the the insurance company should see that that mortgage is paid in full and there's no longer a mortgagee interest. So I don't believe, and this would be probably have to be verified through the seller's insurance company. They might be able to issue that check just payable to the seller because there's no more mortgage now because the mortgage was paid in full. Does that make sense?
But with all the claims that are going on right now, like everybody's in the middle of, so I don't know how the insurance companies are, unless you report it and you call and say, okay, I sold my property, which in that case a lot of people are scared that they're not going to be getting the full amount of money from the insurance company that they want. So so that's
Maria,
my biggest thing
that's
right
a
now
really
with
interesting
sellers.
that's an interesting question. But think about this: what Nicole's saying is right on because if you didn't have a mortgage on the property, the check would be made just payable directly to the seller.
Mm-hmm.
But so let's say in your situation, the property sells, the mortgage is paid off by the amount of money of the sale. The mortgage is 100 grand, the
Mm-hmm.
buyer's buying it for 300. Well, obviously it's an easy payoff. And then 6 weeks later, the insurance company is issuing the insurance check. At that point, it would be made out just to the seller. And just like anybody, when we tell our sellers when you close on the property, alert your insurance company, send them the closing statement showing that it was, paid off and you're no longer the owner of the property. I'll reach
The
out to
problem
Paula
is right
after the
now
call.
the
Yeah.
amounts, John.
What?
Insurance company, like the sellers are going through that fear of not getting paid the full amount because they're closing. So that's where I'm at, like with a few questions that I have from sellers. Should we wait a little longer until which I advise strongly to just wait until you settle with the insurance companies, get the reports from the adjusters, have an idea how much are you gonna get, and then we can even decide on price. Because I think there's too many balls in the air right now on even pricing properties.
Yeah, I would think, maybe I'm naive in this, that the amount that the insurance is paying has no bearing on whether or not it's your property or you sold it. I mean, the claim amount is the claim amount. What's the
Yeah,
difference? If
And
you
is the
sold,
exactly.
lender going to give them a headache saying signing on that check because they want the house fixed?
well, they won't need to sign off anymore if the property is sold.
Yeah, what I would
Right.
suggest, if the property is sold, there should be Nicole, don't they get something as far as a payoff of the lien, like a formal?
So when we're going through closing, we're going to request a payoff from the seller's mortgage company. So they're already getting an insight that the property that they have been requested for a payoff. So the mortgage company usually already has that insight. Now, do they know if the closing is going to go through? No, they don't know that. They don't know that until they get their check. And then at that point, the mortgage company would get the check from closing. They would process their loan. That loan would be paid in full. The satisfaction would be recorded. The settlement statement would be provided to the insurance company to let the insurance company know that the property has been sold. And then the insurance company would see that that loan has been paid off in full. It could be what you're in the mix of they've already processed the check. Because again, your timing of when the claim is done and you're closing, not everything is always working synonymously together. So the sellers, if it's in the process where the loan hasn't been posted as paid in full, if that check is made payable to the seller and the lender, then the seller has to get with the lender. There's special departments that deal with the claims. So the seller would have to, hopefully, if they have a local branch, they can bring that check to a local branch, like a Truist or a Chase or something like that, and have it endorsed there. Sometimes mortgage companies aren't always local. They would have to send the check to them. So in that case, I would tell the seller, don't endorse it, don't sign it. Get the check over to the mortgage company, have them endorse it once they can see that the loan is paid in full, and then that check would have to go back to that seller.
But I think the point here is to get the check just payable because obviously we're assuming the check is coming after closing and after the lien has been paid off. So the key here is the seller needs to communicate, in my opinion, extremely closely with the insurance carrier and the lender. I mean, and get things in writing, get emails so that you keep track of it, because the claim, now I haven't been in insurance for a long time, but obviously you guys know Steve's 31 years and I was 10 years as a claims adjuster. We cannot reduce the amount of the claim based on the fact that you sold the property. That would be an egregious move and a bad faith move. Triple damages. I mean, bad faith claims, you get triple damages for bad faith, number one. And again, I'm not a licensed insurance agent, just pass Stephen. But anyway, so that being said, I think, like Nicole said, a satisfaction of mortgage is going to be filed with the county. You should get a satisfaction of mortgage from your lender once your loan is paid off, whether that happens or not. And that is the thing I think you take to your insurance agent and say, hey, remove this lien holder from my claim. This has been paid off. I sold the property. I'm due the damages. But I completely.
You can also get paid in full letters before that satisfaction is recorded, too. You can call your lender and say, my loan has been paid off, but the satisfaction, it takes about 30 to 60 days for it to be recorded in public records, but they can produce a paid in full letter immediately once it's been paid in full. That's
what I would do. Yep.
And then you bring up a great point, and I'll get some clarification from Paula, okay, on how does this all work if in that situation where the property's sold, the claim is still pending out there and the seller has not received the check. Good point.
I think the safest way to do this will be to have everything from the seller, that everything has been done. Even though if the property, is an investor special, then at least you're not, putting all of that out there. Because see, here's my biggest thing. There's going to be insurance companies that are going to be issuing the check to these sellers with double the money what the sellers were thinking. And I don't know, if they will cut the mistake in the middle of, but I'm sure this is what's going to happen because the adjusters are the one that file the report. You sign your address as the property. So getting a hold of the adjuster to change where the check is going and everything, by then the checks are going to be out already. Well, I'm just wondering how many people are going to try to cash those checks, that belong to the lender. So they got paid by the buyer and they're going to be paid by the insurance company.
Mm-hmm.
You know what I mean? So that's what I was thinking. Maybe the properties that are in this kind of situation, we have to require a longer closing.
I think if the seller is nervous about it and unsure how to navigate the communications with the insurance company and the lender, then yeah, maybe the best case scenario is for them to wait and to get their money.
Mm-hmm.
I'll get some
probably just depends on your client, how diligent they are to follow up on it. Some people are not, or not very computer savvy, or not going to be updating, or maybe they're just busy with other things. So it probably just depends on how your client is. And,
Yeah, I agree. I think it's going to depend on the seller's comfort level.
It's a full question of even the timing because, some sellers are deciding, okay, let me just do drywall. I don't want to do anything else, but let me just do drywall. So now who is paying these poor drywall people? Okay. Who is going to until they get this check? And will that create a lien? Most drywall people, and I'm going to use that as a, because they don't file for liens unless you don't pay them. So they're under the impression the seller is coming out with the money. Well, the seller sells this house and goodbye. So who is paying now? The drywall people. Because at this point, I'm even scared of referring people, to be honest with you. I don't want them not to get paid, but everybody's in the middle of this. So of course, there has to be maybe a contract that is different of, what is happening with the house and so forth. But there's a lot of things that are coming up brand new that I think we have to just play it safe and say, okay, when do you file this claim? And give it 45 days or 60 days instead of closing in 10, even if it's a cash transaction.
Right. Yeah. Great points, Maria. Thank you. Hey, Nicole, I want to thank you very much. You're a walking encyclopedia and awesome at what you do. So thank you for being here this morning.
Thank you. I'm really curious to see how this progresses on your guys' side of things. If you guys have any like interesting stories or interesting scenarios, please share, because we're all going to start experiencing them.
Okay.
Thank you, guys.
Hang on, Nicole. We're going to get one quick picture. Jimmy, go ahead.
Okay, it's countdown. 3, 2, 1, smile. Awesome. Thank you.
Thank you. Nicole, thank you very much. Karen, well done setup. People, you got our numbers if we can help you. Okay? Stay positive.
Yes.
Peace.
Bye, guys.